Welcome back to International Finance. I am Andy Kim, your Dr. Finance. Today we're going to go through Chapter 11, and that's International Banking and Money Market. And the textbook we use is Resnick and Ch11's International Financial Management, Chapter 11. Now this chapter is about introduction about international banking itself, right? Here we take the perspective of the bankers. Until now, right, we learned the basic concepts of international finance, and then we sometimes take the perspective of the corporations, multinational corporations, and entrepreneurs, all different, sometimes it was bankers, but in this chapter, this is about specifically about the banker's perspective, banking houses, right? House of Morgan, right? These Rothschild family, or the House of Rothschild and Warburg, right? These Jewish banking families, or there are some Chinese, overseas Chinese banking families, and then Merrill Lynch, right? All these kind of guys, or Swiss banking groups, right? We are going to take the perspective of these guys, right? International bankers, right? Now, that's why I threw in all these kind of emblems of famous banking groups over here. Now, before we move on further, we need to think about what is banking about, right? What is banking about? What is bank? Okay, what does a banker do? We need to think about these over the next couple of seconds I give you. Now, what is banking about from economics point of view? Right? We say it's about moving money from A to B. A to B? What do you mean? Connecting the dots? Connecting the dots like Steve Jobs? Not really. Here, let's say there are a group of people who got a lot of money. Okay, the resource is scarce in this world, right? And the money is scarce in this world, but is concentrated on a certain small group of people, right? And then let's say that's group A over here. But usually these people, they don't have good business ideas. That means positive NPV project ideas. It's extremely difficult to figure out, right? Everybody has bounded rationality, of course. And then even though they just try to figure out all those good ideas, it just does not come out easily, okay? But there are some group of people who has many or some positive NPV ideas, good ideas, business ideas, entrepreneurs, right? The trouble with them is they don't have money, right? Idea does not necessarily come together with the monies, right? Of course, the money will follow these ideas, right? But what I'm saying is the guys with good ideas are not necessarily the guys with the money, right? So people in B need people in A, and people in A need people in B. But there are some concerns. Right? That means scattered all around the world, and then they just don't know each other. First of all, the guys with money, they would say, if somebody comes directly to them and say, here's my idea, and they just trust me, I'm going to, make this $1 billion more for you. And then what would they say over here? That must be another scoundrel. Just, right? I don't trust you, right? And on the other hand, these kind of guys as well, right? Even though they have some good ideas, somebody approaches them and they say, I will put you some of the money, so just to work on it. But they also may suspect, where did you bring this money, right? Is this money from the black market or something? How can I trust you? So there's a serious trust issue going on between these two guys, right? There we need somebody who is really trustworthy and that has a good reputation. That's the strong trust, right? We need an intermediary called bankers, right? Bankers. Now, here, this idea is coherent with the terminology called 금융, right? 금융학 or 金融学 in Chinese, right? Which is Korean pronunciation 금융, right? Of Chinese pronunciation 金融学. What is that about? 자금융통, like money flowing, right? How you transfer this money from one place to the other places, right? That's about finance, right? Finance is about 金融学, 금융, and 자금융통, all these kind of things. In the end, we need some trust. These two people, they don't trust each other. They need some intermediary called bankers, right? For that part, these bankers should build up their reputation throughout long history of diligent working. 워라밸, no work-life balance at all for investment banking, right? Because they have to deliver as has been trusted to them, and then with their best work ethics, right? With their best work ethics and best competence and brilliance, so that these guys can trust the bankers, and then these guys can trust bankers, so that they could invest and raise this capital, and then do their business and then return it, right? Somehow. So that's the banker's work, first of all, moving money from A to B. Okay, and this is where these days all those fintech companies claim that they want to democratize and disintermediate over here, and then claiming against bankers, oh, you fat cat bankers, get out of this way, so that we could directly connect these two guys somehow. So that they would invest and then they would deliver some return, right? The fintech is just a disintermediating or somehow. The thing is, disintermediation and democratization of this finance, all these kind of things, sounds sexy, but how much is it realistic? Okay, how much is it realizable is an important question, by the way, because this trust is not something that builds up just overnight. It's something that builds up through decades of hard work and the centuries of enduring through ups and downs of business cycle, right? Booms and busts and booms and crashes, right? All these kind of things. Surviving guys get the trust, okay? Not many guys get in there, right? Natural selection happens. The survivors, okay? Survival of the fittest, right? They get the reputation and get the trust, okay? Are all those fintech companies, okay, having that kind of trust? Or in marketing sense, strong brand equity. Some of you must be loving marketing, right? That if you feel like you're a marketing guy, be my guest, right? I'm also a marketing guy, actually, in your age, right? When it comes to brand equity, nothing can compare the trust given to these bankers' names, right? It's about billions and billions of dollars putting on there. It's not just people spending their money like here and there, like regularly, right? Like that, but billions of dollars. I trust you. Invest it somewhere. That's a strong brand equity, right? So that matters, right? Strong trust goes together with that brand equity. And then that's a banking business described in a long way. Another way of saying about this banking, right, is about, did I say this is information? Okay, information production. 정보 생산, right? Information production. Banker's business, a lot of it is about information production. What do you mean information production? And this is partially why fintech is so much important, because it's about information technology. Makes sense? What is information production about? Well, because these guys don't know about the entrepreneur's business nature, right? They need somebody who can analyze this business so that these guys will have, oh, good trust, and then I will just invest my money over there. That's a positive NPV project. I now understand with your report. That's analyst report going on. And then likewise, right, if you're commercial bankers, every now and then you just produce the call report about the companies that borrowed money from you, right? Information production. They have to know about these entrepreneurs. Also, these entrepreneurs need to have some good idea about these investors themselves, right? Is it trustworthy guy or anything like that, right? A loan shark or anything, or this kind of information has to be given to them as well. But the information that I'm talking about is majorly about analyzing these business opportunities, right? Those information creation, information production is an intangible yet such a highly important part, the major part of business. Banking is this information production. And this is something people don't understand right away. Information production, hard to grasp, okay, hard to grasp, especially these days, because it seems that because of the internet and Google and all these informations seem to be easily available so that anybody can understand all kinds of entrepreneurship ideas right away. So that information production is worthless, they may say it. Some people might say it. But in the end, if you delve deeper into this small entrepreneurship ventures, right? If you take the perspective of venture capitalist, okay, who connects these guys with money and then to these ventures, right? These guys still don't have good idea about each different venture entrepreneurships, right? Somebody has to analyze those things for them, okay? Information production is an important part. And because people don't easily understand the importance of information production, like our president Moon Jae-in sometimes say like, oh, bankers are fat cat, and then just the interest rate has to be capped somehow, and then the market, in capital market or bank lending market, this kind of thing has to be heavily more regulated so that you cannot have more than X% of interest or something like that. Silly idea, okay? Not a good idea, okay? We need to educate them, right? Information production is a difficult job, okay? It's a very, very difficult job because you need to understand this business in a very solid manner, right? You have to be good at those industry, right? Anyway, so information production is a very important function of this banking, I told you, okay? Now, another thing I want to highlight, right, is about banking business, right, especially for depository institutions perspective, right? This is about kind of a portfolio management. What the heck are you talking about? I'm not talking about equity stock portfolio management. It's about portfolio management, the loan portfolio management, right? Loan portfolio. And then it gets back to the balance sheet of a bank, balance sheet. Just like any production companies, manufacturing companies, banks also have balance sheet, right? Balance sheet. What do you have on your left-hand side? Asset. What do you have on your right-hand side? That's liabilities and equities. You remember that part, right? But the trouble with this bank's balance sheet is, number one, very dull, right? If you look at closely and then blindly for just about 3 minutes, you will surely fall into sleep. If you have a hard time getting, asleep, right? Sleepless night in your whatever place, right? Make sure you watch this balance sheet of banks. It's so dull because everything is just money, without, tangible ideas going on over there. It's difficult to extract. I mean, if it is, Samsung Electronics balance sheet is kind of exciting because by looking at asset, you see Oh, how much is invested into this semiconductor manufacturing, and how much is invested in those monitor manufacturing and screen manufacturing. You can picture that, right? And steel industry, POSCO, yeah, the steel coming out, and that must be captured in this asset. You can picture that right away. Oh, Apple's balance sheet, iPhone must be there. iPhone, how much they produce, or their inventory, this all sitting in this asset side, right? That's kind of fun to imagine that. But banking, right? What do you have? It's loan, they say. It's a money. Okay, money. Yeah, money. But that's money. What else do you want, right? It's difficult to picture where this money is loaned to, what kind of corporations. It's not immediately picturable or imaginable by looking at this balance sheet. They just say lump sum $1 billion of the loans are given to somebody or whatever, a group of companies. That's it. And then liabilities and equities. Well, liabilities, what is their liabilities? Well, that's the deposit amount 예금 that you receive from billions of customers, right? Or millions of customers. Deposit. Right. And that deposit, it's not as fun to imagine that, right? Yeah, millions of regular people like you and me just go there, common people, putting my money, putting your money over there. It's no fun. But, yeah. Before I say but, another part of being the bank balance sheet being boring, or even more like sleep-inducing, is because the left-hand side and right-hand side seems like flipped. What do you mean? Well, I said asset, right? A lot of it is about loan. Okay? Well, loan is actually from the borrowing company's perspective. Let's say Apple, right? Apple's balance sheet. How much did they borrow from any bank, right? Bank of America. Their loan that they have to pay later, IOU kind of things, is sitting on the right-hand side of balance sheet. Here's the asset, here's an equity. A loan is a liability from manufacturing company's perspective, but in bank's perspective, it's asset on the left-hand side of the balance sheet. It's flipped, so it's kind of confusing to you. Okay. And then the deposit, right? Well, from individuals like you and me, right? That's my asset. I put my money, cash, into my bank or whatever bank in the form of deposit. That's my asset. But from the banker's perspective, that's a liability. It's a flipped. Left-hand side, right-hand side flipped, right? So that's a point where it gets a lot more complicated. More dull, I say, right? Anyway, so balance sheet, right, is here, and equity is over here for banker's perspective as well. Now, what am I trying to say to you here? Let me draw it again over here. Yeah, the balance sheet of the bank, getting back, balance sheet here. And then the thing is, like Bank of America or JP Morgan, Chase, they collect those deposits from millions of people or billions of people from around the world, right? And then equity is over here. And then like so many of you and me, like we deposit, okay? That's their liability. And the thing is, we can withdraw all this money, okay, not all, but our deposit at random time, okay? It's this is liability, but it has a maturity in a certain way, in a random way, okay? The maturity of this liability is random time. It's not 1 year maturity liability or 10 years maturity liability. Usually it's random time. Of course, there are a lot of fixed maturity deposit, but for usual checking account, right, it is random time. Okay, but the interesting thing is majority of these deposits, right, even if it is checking account, the majority of it is sitting over there, right? And then not all people get to the counter and say, I want my money back. They don't say it simultaneously. If they do it, like if millions of people run to the bank counter and then ask this banker, say, I want my money back simultaneously, we call it bank run. We are all in trouble. And then the disaster happens, right? That's like a bank run on Northern Rock in 2008 or something, financial crisis period. And then the financial crisis in 1913 or 7, like the 1907, right? Or Great Depression kind of period, right? But usually we don't do that. And then number 2, we have depository insurance. So we don't need to run to banks, right? But anyway, the important thing is, out of these the deposit amount, right? Out of the whole deposit amount, only a small fraction of it is required or withdrawn every day. Then remaining part of it stably stays there. So what do you do with this money sitting on your vault? Well, invest in this kind of manufacturing companies or service companies, which is non-banking companies. You invest, right? In the form of what is the asset? In the form of loan, right? You loan it out, okay? And charge interest on it, interest on your loan, right? And then, of course, as a banker, once you have deposit, then you have to pay these depositors RD, deposit interest rate, 예금이자율, right? In Korean terminology, 예금이자율 or deposit interest rate, and then 대출이자율, loan interest rate. Which one has to be bigger? Well, this one has to be bigger than the deposit rate. Okay. Of course, why? Because this is your revenue, right? The banker's revenue comes in the form of interest, right? And then this is your cost of goods sold. Cost of goods sold. Your raw material is money. Oh, raw material is money. And then depositors. It's not for free. You have to pay them somehow. So that's why this deposit interest rate, is directly related to your cost of goods sold. And you make your living by the spread between these two, the difference between these two. Spread 장사, they say it, spread. Yeah, loan spread. That's nothing but the difference between these loan rate and deposit rate, right? So that's your profit margin, okay? Now, that's a basic idea about it. Now you loan so many different companies. And I said, job of banking is about portfolio management, the portfolio of loans. Okay, loan portfolio will be on your balance sheet. Okay, loan portfolio. Then, as you see the portfolio, right? What's the benefit of it? Well, diversification. Okay, makes your portfolio more efficient. That means you can achieve the same return with lower risk. Okay, high risk, high return. We know that, but by forming portfolios, right, there will be some loan amount to a certain company. Okay, loaning it to Samsung Electronics may be canceling the effect coming from the loan to Hyundai Motors somehow. Okay, or POSCO, let's say. Okay, two different industries, they go to the opposite direction, they may cancel each other out, so that in the end your loan portfolio will be stable. As opposed to the situation where you loan your money 100% to Samsung Electronics, or loan your money 100% to POSCO or the steel manufacturing companies, right? So instead of concentrating your portfolio into one or the other, diversify it, and then make your portfolio more efficient. You want to achieve better return with a given level of risk, right? That's the benefit of forming portfolio. So the bankers have known this thing for about 1,000 years or 5,000 years in human history. They collected all those deposits from you and me and all these people, and then lent it to all different kinds of companies and managing this portfolio so that they will be reasonably managing this risk, right? This is risk management tool, right, going on. Now the question becomes, what if this loan portfolio's value, or which means your asset value, okay, changes, right? The market value of this loan portfolio or this asset value of your balance sheet will fluctuate as the economic cycle goes on, right? Idiosyncratic part will cancel each other out, just like what we learned in our finance basic class, right? Financial management class. But there are some systematic part. Macroeconomic shock happens, then if the COVID-19 kind of crisis takes place, like remember last year in March, right? Though so many of the businesses like airline industries or hotel industries, they had to close down and shut down, and some of them really went bankrupt. That means your loan portfolio value shrinks down, okay? Shrinks down. How somehow, if that goes to the extreme, your loan portfolio value may shrink even further down, so that the market value of your loan portfolio may be smaller than your liability over here, the deposit amount. Then you're screwed. Okay, then you're screwed. Remember, you have to repay to these depositors at random time. But what if this asset value or loan portfolio value shrinks down like crazy so that you cannot, repay these deposit amount? Okay, you're in trouble. Banks gets insolvent. For that part, you need a buffer capital over here. It's like a buffer or bumper in a car, right? You need some bumper so that you will absorb those kind of shocks from the macroeconomy, right? So that is primarily why we pay so much attention to this equity part of your balance sheet in bank balance sheet management, right? We're going to talk about this kind of concept of buffer capital, all these kind of things throughout this chapter. So wait for the next sets of videos, and then we're going to go through one by one. Bank management in international perspective. Okay, so thanks for watching and see you later.